Wednesday, February 18th, the S&P 500 closed up 0.5%. Earlier in the day, about midday, it was up a full percentage, but then the minutes from the last Federal Reserve meeting came out, and the consensus of the members of the Fed hinted at maybe a more hawkish view, which means that would possibly mean fewer interest rate cuts this year. Just as a reminder, when it comes to interest rates and the Fed, there's hawkish and there's dovish. Hawkish is tight with fewer cuts, and dovish is more allowance and more interest rate cuts. So the market took a dip on that, thinking that there might be fewer cuts than expected. Good news, some software and AI stocks rose today, and there were a number of different things that occurred, but I think there was one of the biggest catalysts was that Meta announced a big strategic partnership with Nvidia. So Meta's going all in on the Nvidia full tech stack. Now, Nvidia makes the semiconductors. They also make the software, the CUDA software. They've got network switching as well in their data center. So they've got a whole solution, and Meta is going all in on that, meaning that they're going to spend tens of billions per year for the foreseeable future with Nvidia. And something I found interesting, Mark Zuckerberg, of course, he talked about the best-in-class performance of the chips from Nvidia, but he really highlighted the energy savings that's associated, that the Nvidia chips are so efficient comparatively to competitors and use much less power and burn cooler. And just a reminder that we've talked about that energy could very well provide, prove to be the pinch point in the AI build out of all the data centers. So I'm always keeping an eye on energy and the availability of it. And anyhow, that was an interesting comment by Zuckerberg to really point that up. So something else that came out was Bank of America announced their equity flows. And last week they saw a net selling of almost $8.5 billion worth of single stocks, which was a near record for them going back decades. And it was led by two sectors: financials, banks and financials, and also consumer staples, which I found interesting. um, and consumer staples being more recently having some good momentum to it. Anyhow, Bank of America tracks both institutional and individual investors, and they're really good. I really like paying attention to them. They've got, how much I like to look at volumes and of stock and flow, overall flow of money. Where's it going? How fast? In what amounts? And Bank of America is fantastic with that data. Very broad set and really inclusive to me. It really encapsulates what I'm looking for as far as that indicator. So let's talk about imports and exports. The New York Federal Reserve did a study of last year and concluded that 90% of the cost of tariffs in the United States are being paid by, guess who? Us, consumers and US companies, US consumers, US companies, 90%. And a few weeks ago, I talked about the Kiel Institute, and they had analyzed 25 million shipments, over $4 trillion worth of value, and they too came to the conclusion that they were closer to 95% of the cost of imports, of the tariffs, were being paid by US consumers and US companies. And just an interesting, fact that the Kiel Institute for the World Economy was used to be called the Royal Institute for Maritime Traffic and the World Economy, and they've been doing this for 112 years. So those are facts, those are statistics that you and I can look up on the port websites, you know, where everything comes in. And so there you go, 90 to 95% is being paid by us. And let's talk about exports. Today, the largest port of in the United States, which is the Port of Los Angeles, reported a year-over-year double-digit decline in exports to China. So compared to this time last year, we are down double digits in our exports to China, and the executive director described current conditions as, quote, dismal. So that's the import and export picture, and facts are facts and statistics are what they are. So this morning or last night, there were some announcements that made oil shoot up 5% on fears that the United States could be closer to military strikes on Iran. I'll let you go and look all that information up, but oil up 5%. And the last thing that I want to talk about is just something fun and anecdotal, and that is the football team Seattle Seahawks are up for sale, and they're being sold by the estate of the late Paul Allen. He was the co-founder of Microsoft along with Bill Gates, and they're selling the Seahawks, the estate is, and they're also selling the Portland Trail Blazers, which he had owned, and they are donating all proceeds to charity, which is fantastic. And in all fairness, they had announced the sale the week before the Super Bowl. And then the Seattle Seahawks won the Super Bowl, and their estimated sales price jumped from $6.8 billion up to between 9 and 10 billion, which not bad for a week's work, but good for them and great for charity. And so that's it. And I guess on that note, I wanted to say that timing is everything. So there you go. So as always, when it comes to our money, I always like to think, number one, protect it. Number two, preserve it. And then number three, make it. I'll talk to you guys soon. Thanks. I appreciate you so much. Cheers.